Before you start buying Christmas gifts for your team, here's what you need to know about Fringe Benefits Tax, because the ATO loves a party rule. Every December, I see business owners doing the same thing. They've worked hard all year, they want to say thank you, and suddenly they're standing at the counter with an armful of wine bottles, candles, gift cards, thinking, oh my goodness, can I claim for this? The short answer is maybe. The longer answer is it depends on whether or not the ATO considers your generosity to be a minor benefit or a taxable one. And that's what we're unpacking today, because nothing ruins Christmas faster than an FBT surprise in March or April. So let's make this real for a second. A client of ours, Tammy, runs a small legal consultancy business. She's got a team of 6 and she is big on culture. Every Christmas, she gives everyone a lovely bottle of wine, a gift voucher, and throws a Christmas lunch. Then we have another client, James, who runs a building company. He also loves spoiling his crew. This year, he's booked a long lunch at the pub and plans to hand out Bunnings vouchers for the team. Both have good intentions, both think they're doing the right thing, but when it comes to their tax situations, it couldn't be more different. And here's why. The ATO doesn't just look at what you spend, they look at who it's for, how much it is, and where it happens, and that's where things start to get a little messy. So let's break it down into plain English. FBT, or Fringe Benefits Tax, is a tax employers pay when they provide a non-cash benefit to staff outside their normal salary or wages. That could be a car, gym membership, a Christmas lunch, or even a gift card. The logic is if your staff are getting personal value from it, the ATO wants a slice. But, and here's the good news, there's something called the minor benefits exemption. If your gift is under $300 including GST and it's irregular and infrequent, there's no FBT to pay. That's $300 per person per benefit. A $250 hamper given from Tammy to Jane is fine. 2 of them in the same month, not so much. So that's your sweet spot. Spend under $300 per head, keep it occasional, and you're in the clear. Now, here's where people get tripped up. That exemption doesn't automatically make it tax deductible. If the gift is classed as entertainment, like tickets to a concert, a movie, or a restaurant meal, you can't claim a deduction or GST credit, even if it's under $300. If it's a non-entertainment gift, think wine, hampers, or a gift card, you can generally claim both the deduction and GST, and there's no FBT. So gifts good, boozy lunches not so much. So here's a quick rule of thumb. If it creates memories, it's probably entertainment. If it fits in a bag, it's probably deductible. Now, let's go back to Tammy and James. Tammy's gifts, those lovely bottles of wine and the vouchers, all under $300 per person, non-entertainment deductible, no FBT, everybody wins. But her team lunch at the fancy restaurant, that's entertainment. So no deduction, no GST credit, and only no FBT if she keeps it under $300 per head. James's long pub lunch for the crew, squarely entertainment. That means it isn't deductible, he can't claim GST. The Bunnings vouchers though, perfect example of a deductible FBT-free gift. The trick is to mix and match smartly so you can be generous and tax smart. You just need to plan before you tap your card. FBT isn't the end of the world, but it is a headache you just don't need. Once the Christmas rush is over, no one wants to be back in February sorting through receipts and explaining why a $320 meal was posted as office supplies. I see 2 common problems: overclaiming and getting pinged in a review, underclaiming and leaving money on the table. Either way, you lose. If you've ever opened your December bank statement and thought, oh my gosh, where did all that money go? This is usually part of it. So, how do we keep it simple? Well, here's the Venta version. Number 1, split your list. Gifts versus entertainment. Gifts are things you give. Entertainment is experiences you shout. 2, keep the gifts under $300 per head. That's the magic number for the minor benefits rule. 3, make sure the expense is occasional. If you're doing monthly lunches, that's not occasional. 4, label it properly in your accounts. Christmas gifts, staff entertainment. Christmas party, staff entertainment. This helps your accountant and protects you in an audit. 5, be generous, but be intentional. It's not about being tight, it's about being smart. This doesn't just save you tax, it gives you visibility and control, which is half the battle with cash flow over the silly season. So before you hit add to cart on those staff gifts, take a quick step back and ask, is it under $300? Is it entertainment or not? And am I giving this because it's Christmas or because it's a regular perk? If you can answer those 3 questions, you're already way ahead of most businesses. The goal isn't to take the fun out of Christmas, it's to make sure your generosity doesn't turn into paperwork. I always tell clients, the ATO loves Christmas too, but they'd rather be on your invoice than on your guest list. So plan your giving, keep your receipts, label them clearly, and come January, you'll thank yourself. If this all sounds a bit complicated, don't stress. These rules are tricky on purpose, and every year they trip up even the most organised of business owners. The good news? Once you understand how FBT and deductions work together, it can become second nature. If you'd like to double check your Christmas spending this year, have a quick chat with your accountant before the holidays. It's one of those 5-minute conversations that can save a lot of headaches later. Enjoy your celebrations, be generous, and remember, it's not about spending less, it's about spending smarter. Merry Christmas.